Now to TCS. TCS reported numbers yesterday, post-market hours, and numbers did come in below expectations. With me is N. Chandrasekaran, CEO and Managing Director at TCS, to talk about the numbers. Chandra, good morning. Great to have you with us here.
Thank you.
Appreciate it. How would you describe the numbers, Chandra? Because the analysts are describing it as the 6th straight quarterly miss.
I think it's been a tough quarter, no doubt. And we had multiple headwinds which you had highlighted. On top of that, we had additional headwinds during the quarter. While the growth line on the constant currency basis is 0.5%, is pretty muted. If you look at the metrics inside, they are all very credible metrics because the international business grew 1.1% sequentially. US did well at 1.4% on a sequential basis. Europe did pretty good, about 2%, 2.5%. And all the industries did well. Life sciences and pharma did over 4%, 4.1%. And many industries grew about 2%. I think we had a more than expected hit in India, domestic business, which kind of impacted the growth also about 60 bips. So I think overall the numbers were not in line with what the street expected from a consensus basis.
The miss, though, in terms of absolute numbers, is slightly higher, right? I mean, I'm talking about consensus expectations. Compared to that,
no, I think
about $30–40 million. The average is about $20-odd million gap.
I don't think it's that much, but again, we may be right. I have not done the math, but basically there's been a miss in dollar terms, definitely. And also the cross-currency impact was a little bit larger than what one would have expected.
The 0.5% constant currency revenue growth, that's the slowest in almost about 30-odd quarters or so, except one quarter during the global financial crisis.
Yes.
Right? How should one read into
So
it?
as I said, it's traditionally Q3 is a weak quarter. We had said that Q3 will be a soft quarter, and we had more headwinds in this quarter than before. And I think you shouldn't. I wouldn't read beyond the fact that it's one of the slowest quarters ever. And not get into serious extrapolation for all the things that I explained in the call yesterday in detail.
Do you think the impact of Chennai was more than what was expected?
No, I think it's just not. Let's not say only Chennai or these things. See, there were furloughs. There was this one-off due to the rains, and then there were headwinds in Diligenta, which I talked about, and then India domestic business added to it. So there were 5-6 items.
No,
all
the reason I
contributing,
mentioned Chennai specifically and
yeah.
India
Yeah.
is because you said, well, India also added to the subdued performance this quarter. There were other issues as well, but India in a way was a new factor, and Chennai is one thing there, right? A one-off there in that sense. Cognizant reported numbers over the last 12 or 14 hours, and they also spoke about the impact of Chennai. But what they said was that
See, I think Prashant, I don't want to get into a debate on this. All I would say, yesterday I explained in the call, when you have 70,000 people working, your business continuity plan for all customers takes care of mission critical applications. Okay, and you make sure that all your mission critical applications are are protected, that the shop is running, production is happening, infrastructure is up. But there are many projects that you do which don't have a mission critical nature. So those are things you have to deliver over a period of time, and those things don't get supported. Okay, so I think you don't build a BCP for moving 70,000 people's work to any other part of the world. It doesn't happen. You can't.
And anyway, it's a one-off.
It's a one-off. It's a one-off, and then it's not. Hope it doesn't repeat anywhere. We don't want it to, not for our reasons, but for the.
But has this kind of shown you, tested the robustness of the?
Absolutely, we were up and running, and there were situations where we had to even help our competitors. To be very frank, because the competitor sites were down. In a couple of situations, clients asked us, and we kind of extended help. Yeah.
Okay. Just talk about the year-on-year growth numbers. How would you say? Because I mean, in the third quarter, the constant currency revenue growth is just under 10%. It's fallen quite a bit. I mean, I think in the 10 quarters back, it was about 70% or so, 80% or so. Now it's up 10%.
Even dollar growth?
The revenue growth, the constant currency revenue growth.
The dollar growth has had an impact very much more seriously than the CC growth or the rupee term growth. Rupee term growth for the year is still lower than last year, but it is still not as bad as the dollar term growth. Dollar term also has had an impact of the cross currency seriously, and the growth has been lower this year. So I think it's an addition, right? Q1, Q2, Q3, all the 3 quarters, our growth this year has been lower than last year, and we did call it out at the end of Q1. We did call it out.
No, I'm just saying, to get to double digit, is it going to be tougher?
I think constant currency basis we are still double digit. Okay, it's a dollar term has had a serious impact this year.
Okay, constant currency is 9.9, almost 10% or so. Okay. I'm just saying, is it going to get tougher?
See, I think
the base is a large factor as well, right? I mean,
I think Prashant, as you said, this has been one of the toughest quarters ever. But the core business and all the metrics that we see are looking good. And if you see all the industries and all the markets, as I explained, especially the US and UK, Europe. UK is also impacted by Diligenta. Hopefully that will be behind us at the end of next quarter. After that, it should correct itself. So we'll see.
Financial year 17, double-digit growth?
I don't give guidance.
But
that's for you to predict. You've been long enough in this job, Prashant.
But
you should not outsource to me.
But do you think it's going to be a bit of an uphill task? I'm not asking you for.
No, I think as I said, I think all indications look good because we have not heard any negative news from customers, any customer-specific problems in our core markets. And as I have clearly explained, energy business is bottoming out from our point of view end of next quarter. And Diligenta is bottoming out.
Okay. I'll get to Diligenta in just a bit. The usual thing which all of us did, you said you should be good at predicting by now. So our way of predicting was look at the NASSCOM growth, add 2, 3, 4 percentage points to the NASSCOM growth and say, well, that's TCS. I think that's what a lot of people did as well. Is that a right way to do it? Do the prediction
how can I say that? Let's see what NASSCOM comes up with at the end of the year.
NASSCOM itself obviously will come off as well, right?
Yeah, because we are a significant component of NASSCOM as well. So,
absolutely. Yeah. No, but compared to that lowered average, would it still work if you say TCS should
I wouldn't know.
a couple of percentage
I don't do that math, so I don't know.
Okay, fair enough. Coming to Diligenta in Japan. You said Diligenta is bottoming out. Can you talk about that? And also Japan.
See, I think I said that last quarter also till this end of this fiscal we'll see a degrowth and then we'll see further degrowth in Q4. And after that at least it'll be flattish, if not growth. And if you manage to close some new customers on that platform, then it'll pick up momentum. Japan, I think it's more a situation of ramping up and getting the growth. And the decision cycles are long and we are still working on deal closures and ramp up. So I will wait for some more time before saying when the growth momentum will pick up in Japan.
Fair enough.
It's more learning as well.
Okay. The realizations were absolutely flat in the third quarter, the December ended quarter.
Which is fantastic considering there is no growth.
And
we've had so much one-offs, one-off hits and cost. See, we had in fact, on the realization and the margins, we have come better than the market estimate, or in line or better.
Realization and pricing.
See, realization is 10 bips improvement. I think it's such a low growth, 0.5%. So what do you make out? We have going 40 bips of volume and 10 bips of realization improvement. So which is okay.
Fair enough. How's the traditional, the bread and butter business really done? The application development maintenance.
So that's what I said. No, those things would have had a big impact due to this, both furloughs and the few days we lost. So all those things will have an impact on those
Fair
businesses.
enough. But if you keep those one-offs off,
But otherwise, as I said, we have not seen anything from customers in where
in
we are
these core
today.
areas,
We
which
have not heard
suggests
any negative news. We have not heard any negative news.
so the core isn't slowing down.
No,
Absolutely nothing.
nothing.
And the new, how's that?
See, I think digital is growing faster than anything else. Right?
Okay. Okay. How's it unfolding? I mean, and how's,
So we
how's
have-
the opportunity unfolding, and how are you being able to? How fast are you
So I
being able
think
to capture?
digital has two big components, right? One is in terms of the services that we partner with clients to bring about a transformation, whether it is in big data, insights, analytics, or in terms of Internet of Things, digital marketing, and moving them to cloud, to a hybrid cloud architecture, and moving them to enterprise cloud platforms. There's a whole lot of opportunities there. There we've got all the skills, capability, the competency building because of the investment we have made in TCS digital learning platform. Already we pointed out that 70,000 people have gone through the capability building exercise. And the second portion is our own platforms and intellectual property. A large number of those we have unveiled, and we are getting clients on board, and those platforms are getting adopted, whether it is Ignio, whether it is ION assessment, whether it is our Chroma platform, TAP platform, our Intelligent Urban Exchange platform, Customer Insights platform, a whole lot of platforms. And but they are all in early cycle of customers moving onto those platforms, testing those platforms, and we got a few wins in each of those platforms. We need to scale those platforms. When we have more customers getting onboarded in those platforms, then we'll have.
Among the IT vendors, IT services, large vendors, do you think that in the digital you're gaining market share?
Yeah, I think, see, it's a new business, right? And I think we have top of the line capabilities, and we are partnering with the clients in a very big way. So I think we will play very, very strongly in this space.
One point which is made by some, not me, is that while the traditional businesses are not seeing that kind of growth, the digital business isn't growing as fast. So there is a bit of a flux. The translation will happen, but it's going to be a bit of a flux till that happens. How would you respond to that?
It's not your view, so why you ask that question? Anyway, I think, Prashant, these are things that people have opinions. So every opinion has a merit.
Okay.
I don't quite agree with that opinion, but
Fair
at the
enough.
same
No, that's what
time,
I wanted.
also I would say that no one trend catches momentum at the same pace across markets, across industries, across customers. Okay, because an adoption of a trend, as much as it's absolutely important for every market, every industry, and every customer, each of them are in a different situation. Somebody can invest, somebody has got the team to do it, somebody is confident of pulling through the transformation, somebody says, I've got to prepare for next one more year before I launch.
So it's very difficult to say go company by company. Yeah. So in your assessment, which are the sectors?
So I've said that the fastest sector doing the transformation is retail.
Retail.
All consumer-facing businesses.
Fair enough.
And then all the asset-intensive businesses for Internet of Things.
Okay. But consumer-facing essentially. That's the... and the non-consumer facing, that is...
More. I mean, they are more focused on Internet of Things and analytics.
Again, not my point of view, but I'm still going to ask you that question. Is acquisitions a sign that one is actually gaining traction in the digital space?
Because I don't believe so.
Okay.
I don't believe so. So I think, you build capabilities in multiple forms.
Okay.
What are the key strengths we bring to the table? I think we understand the domain. We understand our customers. We understand how merchandising works. So we have come out with our own platform for digital marketing, which our customers are interested in.
Sure.
So we have a top-class talent. And I've always said that there is only legacy technology, there is no legacy people. So these people have tremendous experience and expertise. So we are enhancing their capabilities and competencies, giving them the tools that are necessary to perform in the digital world.
Sure.
So, and then sometimes you feel that there is a capability that you can get through acquisition much faster than you acquire. But it is not that you acquire 5 companies, then everything is done. So you have to be holistic.
No, I wasn't suggesting that doing acquisitions necessarily means that you win. But the point is,
I think
not
if you need to,
doing
you
also
do it.
doesn't mean that you're not doing. I mean, it's not.
Absolutely. I think you have to be
Either or.
open.
Yeah.
The best way I would explain is that you've got to be open. You've got to see what you need and what you have and how are you fixing the gap. Sometimes it's partnership, sometimes it's a startup, sometimes it is an acquisition, sometimes
Whatever.
it's internal building capability.
Sure.
And so instead of that, I think, we can't just go on this saying that you buy this company, buy that company, the problem will be fixed.
Fair enough. That's a straight answer. The year 2016 has started on a pretty a poor note for a lot of industries. I mean, commodity prices have collapsed, oil prices have collapsed, currency markets are in a turmoil, stock markets now are in a bit of a turmoil around the world. What is your sense and what could be the impact of all of this? I mean, this almost, according to some, looks like a repeat of the beginning of the last crisis, global financial crisis.
I hope not,
May or
but
may not be.
yeah. So I think the macro has not been good in the beginning of the new year. I think the impacts we have to wait and see. But from our industry point of view, I don't believe that it has an impact at this point in time. I believe that the adoption of digital is foremost in the minds of all customers, and it is an important imperative that customers are on this journey. So that gives tremendous opportunities not only in transforming the front end, but also preparing the back end. For example, all their legacy data centers have to move to a cloud architecture, a hybrid cloud architecture. There will be some data centers, some private cloud, some public cloud infrastructure. So I think cloud will play a significant role. That is a huge transformation. The corresponding applications have to be cloudified, if I may say so, or in some situations they have to be moved to an enterprise cloud platforms. So there are enormous number of opportunities, and all these things is going to happen in spite of the macro, what it is. But having said that, we'll watch.
Just one thing, it's a very rough cut, non-scientific way to do it, but what is the contribution of or dependence on commodity companies, commodity clients, or the commodity
Ours is
sector?
very low.
Very, very low.
Very low.
Under 10%?
Lower single digit.
Lower single digit. Okay, fair enough. So the direct impact.
Really lower single digit.
So the real impact.
So we are
direct impact is
not impacted by the energy and the resources sectors.
Okay.
Some impact, but not a whole lot.
Okay. Any thoughts on the currency and how that might play?
I think it's very hard to predict. I think at this point in time, looks dollar is very strong, and every currency is impacted. But I think in rupee is probably better off than most other currencies.
The US, as part of my headlines, I read out what.
Yeah, I agree
President
with the
Obama
president.
said.
I agree with the president.
You do?
I do agree with the president.
Are you seeing it in the ground?
We are seeing it. We believe that will be a very important market, and that market will do well. Because I fundamentally believe the whole innovation and transformation to digital, not only in terms of the technologies I mentioned, but also in technologies like energy, technologies like automobiles, etc. I think US will move pretty rapidly.
I spoke to Mr. Natarajan of Zensa yesterday, and he actually, I asked him the automation question, and I said, how far out is the impact really going to be? And he said, well, at least for 3 years, we are not going to see any impact on the numbers in terms of pricing going down or revenue opportunity, nothing of that sort. The impact of automation in the US on Indian IT services vendors. We've discussed this before, but anything else new you're seeing there?
I think automation will play a part. It will increase productivity. It will definitely decrease headcount over a period of time. And that's a good thing. So we'll see.
Chandra, thank you very much for your time. Always a pleasure.
Thank you, Prashant. Thank you.
Thanks very much.
Thank you.